What did you make of the Fed's unexpected 50 basis point cut, and how much more easing do you have penciled in by the central bank?
Yes, good morning. Well, thanks for having me. We do indeed expect one more 25 basis points rate cut from the Fed in its regular meeting in 2 weeks. What do we make of it? It definitely helps. It helps emerging markets move because the financial conditions have tightened a lot over the past few weeks, month, with credit spreads widening, with equity markets falling, etc. So it's definitely helpful. But at the end of the day, our cautious outlook hasn't changed because we're faced with a supply side shock. There's only so much that the interest rates cut can do. The economies are slowing. Emerging market central banks will also probably follow through where they can with further rate cuts. I can say, it definitely helps, but then it doesn't change the course overall, and we retain a fairly cautious view.
So only one more 25 basis point cut you see in this potential easing cycle. Is that going to come in a couple of weeks when, of course, the Fed meets for its March meeting, or do you anticipate that it could be later on this year?
Well, we're looking for the next 25 basis points in 2 weeks in the regular meeting in March, and then Fed probably will reassess the outlook, after these rate cuts. There could be more follow-through from other central banks, could be Bank of England cutting in March, that's our forecast now, could be Bank of Canada, and clearly certain emerging market central banks where we think there is room, in particular, those countries where the real rates are still very high, given where the inflation is, where the nominal rates are, Russia and Mexico, we think they have room to cut further, possibly here and there in Asia. But we should put it into the context because last year we have seen a very aggressive easing cycle from emerging market central bank. It was the most aggressive since global financial crisis. This year we have seen more than expected, but probably not as much as like last year. The rooms are more constrained, but we still think there are a handful of countries where they will probably be biased more to the downside in terms of their rates easing. And as I said, there are a few out there where we think the room is much higher, where we're a bit more positively biased. Now, general cautious outlook for EM, I think there are a few countries where really it's very high and they could actually bring rates down further.